Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, March 17th, and we are wrapping up what is probably one of the more hectic weeks we've had, I would say, since, FTX went under or, Luna went under. So definitely, comparative to that in terms of the amount of news and the amount of data that we've had to parse through and understand, and along with the volatility. Now we haven't had some of that ugly giant red candle volatility, but I'm sure many of us have found it a little bit difficult to trade in this environment, given the news cycle and the macro around rising interest rates, potential QE, bank bailouts, and then of course making sense of all that in terms of inflation and unemployment and future Fed rate hikes. So it's been quite a difficult week, and I will admit I'm excited for the weekend to take a little bit of a break, considering we don't have to deal with the news that we dealt with last weekend. So very welcome. But let's go ahead and figure out what may come for crypto this weekend and going into next week, because remember, we have FOMC on, or we have the FOMC meeting on Wednesday, in which we will get the next rate hike or lack thereof. So we have a big data point coming up on Wednesday. So only 3 more sessions until then for equities, and of course only 5 sessions for crypto. So looking at the dollar, I will say, just judging by RSI, momentum is clearly to the downside. And we are, after getting basically rejected out of that demand zone again, we are back near the lows that we experienced Monday, Tuesday, and early on Wednesday. So, we are still in more or less the same exact position. This is still support, so we could still lift higher and go back to the demand zone, or we end up breaking lower and heading towards the recent lows right around 101. So no clear read on DXY, but this does, it was looking quite bullish to start the week. And obviously we talked about the deviation back into the demand zone, which we got. Risk has obviously looked a little bit better. Crypto has looked a lot better than equities, but definitely seeing a little bit of relief when this is, on the down or sliding down. So, the goal would be for this to decrease this coming week and slide down to 101. Depending on what the FOMC decision is, I think you're going to see a lot of volatility from the dollar, which will immediately go into equities. So in my opinion, we're not bearish until we break this, this support level. But, it does seem more likely than not that momentum is moving to the downside. So I would say breaking 101, definitely more likely than holding 101 as it stands right now. Looking at equities, we did obviously, yesterday we spoke, or we talked about equities, needing to break above the 39.25 level. They obviously got to the estimated 200 moving average on the 4-hour, which was resistance and is always a key aspect of the chart. We typically always look at the weekly VWAP, and we like to look at the estimated 200 moving average. So both of these were in play. VWAP obviously supports, estimated 200 moving average resistance. So very important to watch out for those moving forward. The fact that we're below 39.25 is certainly not good. I did say a close below 39.25 would certainly, not be positive for equities, but we are wicking above the VWAP, and we are, fighting to get back above 39.25 before this closes in just a few hours. So equities markets are only open, I think, for another 80 minutes, something like that. So, a close below 39.25, especially with these types of wicks above the VWAP, not entirely bearish, but we definitely want to see it reclaim 39.25 for any likely bullish continuation. The fact that it's underneath the March 1st low is certainly not anything that I want to continue to happen. So I'd like to see basic deviation back into the range, and then we pop back out and move higher. So that's what I would like to see. Else, we are, going to hover around this VWAP right here. And then, we have confluence of support at 38.85. So if you lose the VWAP and you lose support, then you are, sliding down here and obviously sliding towards the equal lows from December. So we still have to watch out for these equal lows. This is really good this is a really good look on the daily chart, in my opinion. It's basically a shortened version of what happened early December before equities, launched higher. So definitely want to see this type of energy continued. We did have this ugly doji here, on January 9th. And then obviously we continued higher. So I'm not trusting single candles right now. But what I'm trusting is support and resistance and where I want us to close above. So 39.25 is definitely, that would be my signal to get back into an equities trade, provided, price can break back above 39.25. And else, if it continues to stay below 39.25 and gets rejected at this number on the low time frames, which is definitely possible, judging by these wicks right here. So if it does get rejected off 39.25, then we obviously know where it's likely headed next. First stop, the VWAP, next stop, this mid-range support, and then you break this level and you're down here. So pretty simple trading. This is pretty much your trigger point. You can either short the rejection or you can long the acceptance, but obviously this will stop trading shortly. So probably not worth putting a trade out right now. Just something to consider depending on how this closes for how crypto may look, at least going into tomorrow. If this closes beneath 39.25, then crypto may, prove difficult to break the recent highs that it's hovering around now. Not saying that is a definite, but certainly something to consider if equities are still struggling going into the weekend. Looking at Bitcoin, fantastic price action. And actually, if you're listening to the B3 radio show that I was on yesterday with Alex, the Nigerians, Peter Schiff, and many others, we mentioned, I mentioned, the likelihood of bullish volatility heading into FOMC, predominantly in terms of crypto. We, since that conversation yesterday, price is up 6% on Bitcoin, and we are, of course, above Tuesday's high. So we want to stay above Tuesday's highs. I think if we accept back below Tuesday's high of 26.4, that's a bad sign. And then you're probably at least tapping 25K, maybe 25.2 again, which would obviously be the high from Wednesday. So something to look out for there. Basically what you want to see, and I'll zoom out just because the chart's getting a little bit wide. But what we want to see is a break above 26.7, which is resistance that lines up with the lows of May. Not the exact lows, but obviously range lows, I should say. So if you can break above this level, then you basically have, a launch pad to get up to 28K, potentially, 29K. And that obviously coincides with so where we're at now is the low of May. That's pretty much the exact price we're at is the May low. And then where we are, our first goal, if we can get above that low, would be to 28.5, 28.6, which is the range low. And then the high target would probably be something like 31.2. And so let's kind of, let's get the range high there. So 32.3 would be the range high if you can get back into this range. So basically what you're fighting to do, what Bitcoin is fighting to do right now is to reclaim the previous range that it traded in May and early June before we, what was this? What was this drop? This was a 40% drop. So that's what we're looking for now. It's basically the reclaim of this range, which would set us up to then reclaim where we were in May, June, and July of 21. So, there's levels to this game. So, what we want to do is get into this range. I'll circle it. We want to get into this range so that we can start attacking this range, and then we can start attacking this range, and so on and so forth. So, these are kind of, boom, boom, boom. These are like large resistance levels, even right here as well. So, each of these will offer support and resistance provided we end up trading up there. But obviously, baby steps first. So break above the low from May, then we can start talking about the May range. And that's pretty much how Bitcoin is looking from a very simplistic perspective. So, of course, I never recommend longing at the top. I would, personally, I would wait for if you are to get long and you are to really pipe some longs, I would probably wait for a retest of 25.9, 26, potentially as low as 25.2. And then that's when I would look to long. I would try and long that retest because I think although this does look bullish, it's definitely crypto's prerogative to scam you as best as possible. So, while of course that is strictly a guess, the data says longing resistance in terms of crypto is typically not the best move. So take your own risk. We are above, I should note, we are above the May low. That is an important note. But we haven't exactly confirmed above there yet. We're in the process of that, but we still have several hours to go until that happens. So I think I personally am going to be patient because I started closing trades at this level because, of course, it is resistance. And I would like to reload back up here. So that's my personal preference. But understand if we do confirm above this level, it could shoot higher pretty quickly. But that confirm, at least on a higher time frame scale, will not occur for another 3 hours. So something to consider there. I think you have time to be patient. US markets are closed and crypto has pumped immediately after the close. But, we already did kind of get a lot of pump out of the way. And so, personally, I'm a bit fearful at this level of entering a brand new trade at this level. So, but, I think in all likelihood, I definitely am a bull up to 28.6, I think, heading into FOMC. What I mentioned yesterday on the B3 show was bullish volatility heading into FOMC from the majors. We obviously, we've seen that since I made the call yesterday. Daily RSI has a lot of room to roam, and very comparatively to what we saw in January and early February. So, and it completely reset on this move down here. So I don't want to try and convince anyone to not take bullish trades. It is just my opinion that taking a bullish trade at resistance very rarely works out for crypto, and it's certainly not a majority type of success rate. It's not a 51% success rate longing resistance. It's just not. So that's something you have to consider for your own risk. If you are a little bit fearful, maybe you take a small trade with a tight stop. If it moves up, then you wait for the confirmation to add, or you can add, if you're seeing strength and you're confident in your trade, or you can set some stink bids at 25.9 and 25.2. And try and play it up that way if that's the case. So a couple ideas if you're not currently in a trade now. But I will say by next Wednesday, I would be shocked if we did not at least tap 28.6K or if we are not above 28.6K. So in the next 5 days, I do believe that's likely. Looking at Ethereum, similar to Bitcoin, but if we just kind of look at the ETH BTC chart, it's been getting beat down pretty hard. And it is actually below the demand zone that we lined out, which is, it's pretty much on its last leg before, you would want to, before you'd want to ditch the trade completely. So I'm certainly not longing this. If you are, a knife catcher, this is not a bad knife catch to at least make the attempt. But, I think this right now tells me Bitcoin has been moving stronger than Ethereum. Bitcoin will likely continue to move stronger than Ethereum until I see this support hold at this 0.065 level. So something to consider there if you are trading Ethereum other than Bitcoin. I mean, just looking at the chart, Bitcoin's price, comparatively is already above the previous highs. Ethereum is not. So, if you want to play a high beta play and you think that Bitcoin will rip and then Ethereum will follow and, ETH BTC will catch at this support level, then what you want to do is probably long Bitcoin and ETH. So you play it both ways and then you can cut or take profit on whatever is the weaker asset and let the stronger asset ride. So that's definitely an idea. I think probably focusing on Bitcoin right now would probably be more fruitful, but typically when Bitcoin does rise, alts will start to trickle in after its big move. So, by getting in early, maybe you don't get the best trade in the world, but you're early to the trade, you can continue to add and play that intelligently, because alts are gradually moving higher while Bitcoin is as well. But of course, Bitcoin's moving a little bit stronger as shown by the ETH BTC trade. So something to consider there. But I will probably be looking at alts this weekend as well. Just high beta plays. If Bitcoin's moving, it's pretty safe to assume everything else is going to move in a volatile way with that momentum. So, take your picks. I've been staring at AVAX and Atom are two big ones that I've been watching, and then some, Fetch AI is another one as well. And then INJ is actually another asset that I've been looking at. INJ is actually above its highs from February too, which is quite fascinating. So that's definitely something to look out for. But just focused on Ethereum right now. It's very similar to Bitcoin. We've got, resistance and support levels lined out that coincide with trading from August, and obviously all the way back to May and June of 2022 as well. So if you can get above the 1780 number, then you basically have a very nice precipice to kind of reclaim this entire range and get back up to 2K flat. And obviously, very interestingly, top of the range is 2K. Market loves its nice flat round numbers. And obviously, momentum is definitely pushing higher. And just based on daily RSI, still plenty of room to roam in terms of RSI. So again, not encouraging longing resistance. You need to get above 1780, in my opinion, to actually have that be a precipice to then bounce off of. So if you were to long here, you're pretty much praying that you get above 1780. Another opportunity for a long would be wait till it gets above 1780, wait till it reclaims the 1780, and then long on that reclaim. That's a very safe trade. If you are bearish in general and you think that support will get or resistance will get rejected as it typically will, then maybe you're setting stink bids at 1650, maybe somewhere around 1700 flat, and or maybe you're just adding some shorts here because you think we're gonna end up tagging the recent support level before moving higher. And so that support level would probably be something like this, so 1706 would be support. And then I would guess that 1655, 1650 would also act as support as well if 1780 cannot be reclaimed. So, I think this trading is going to be very tricky moving forward and into the weekend. So I would, personally, if you are not in a trade, wait for resistance to break or wait for support or wait for price to return to support before taking another long, in my opinion. And if you are shorting, it's not the worst place in the world to short, but just set your stops really tight so that if you do get stopped out, you can reverse your trade quickly and catch any momentum if you want. Or you set a short here and you set, actually, no, that's a little bit more of a confusing trade, so I'm not going to suggest that. But my personal suggestion over the weekend is don't get long until resistance is broken or support is retapped, and don't get short until you see a strong rejection off of support. I know I've mentioned the opportunity for shorts because we are at resistance, but I think if you are trading, it's better to play it safer and wait for confirmation instead of dipping in something early. If you are dipping in something early, make your stop tight, and make sure that you get a good entry for continuation. Don't just buy green candles or don't just long green candles. The volatility is certainly playing with our heads, but longing red candles has certainly been positive and fruitful since the recent dip. So very much something to consider there. And of course, FOMC is next Wednesday. That will be the big kind of data point for the market. So my opinion is we will see bullish volatility heading into FOMC, but obviously volatility means red candles will occur. I think prices will move higher. They will inch higher day over day into FOMC, but not saying we will not see sell-offs while those prices inch higher, which, and every time it moves higher and sells off, that's two trades, moves higher, long, sells off, short. So there's two opportunities in every, quote unquote movement of price. And so that's, we're trying to find those best ideas. So right now, resistance is being, strong for equities. Resistance is still holding for Bitcoin. So until I see a difference in either of those, I'm not longing yet, but I will say Bitcoin is getting close to confirming. Although in my opinion, I want the 4-hour to confirm, and I still have about 3 hours until that takes place. So, so that's my current outlook right now. So good luck. Happy trading, and see everybody on Monday. Remember, FOMC next week. We'll have plenty of news and information in relation to that and trades starting on Monday. So see everybody on Monday.